Welcome back. You're watching Editors Roundtable. Now, this week, one of the worst performing sectors was the FMCG index. The Nifty FMCG index was down close to about 1.75%, and this is on the back of the profit warning issued by Godrej Consumer. So across the board, stocks sold off. The biggest casualty was GCPL. That was down close to about 10%, but HUL, Tata Consumer, also slipping nearly about 5%. A quick recap what GCPL said. Well, they spoke about flat volumes in the coming quarter. The soaps portfolio, one-third of their portfolio being impacted by price hikes, grammage reduction, household insecticides being impacted by delayed winter, inclement weather in general in North India, and then margins are going to hurt because of a near 50% jump or increase in the palm oil prices on a year-on-year basis. But you know, now the FMCG index is about 15% off from its high that it was just in the month of September. So Prashant, you were telling us, right, that increasingly FMCG is per se a value sector. Right? Is it time to look at FMCG stocks in FMCG? What bucket? And is this pain that we're seeing a little more transitory? Because some companies seem to suggest that.
Certainly. So I'll clarify myself. I guess FMCG has become more value relative to its own self over the prior couple of years ago were obviously valued a lot higher. It is a lot of good high quality stocks in there. Not everything would do well, but FMCG typically does well in times of crisis or in times when broader markets are challenged.
The defensive.
More defensive character. Right now, people are not enthused. Neither the retail investor nor fund managers are enthused about making 10 to 15% annualized return. Yeah. They want something that at least has the prospects for 20-25% kind of expectations. So that's one of the things that in relative terms FMCG has been underperforming. Secondly, consumption has been slow. And you have in the economy many such instances in the past as well. Sometimes consumption is slow, sometimes consumption is faster, sometimes capex is faster, sometimes so on and so forth. So you can't have economy growing at double digit in nominal terms over prolonged periods of time and consumption not participating. I think it's I won't say aberration, but it is part of the cycle. And before we know, that can turn around and consumption could be humming.
Are you sensing a turnaround in the cycle or not yet?
We only sense these things post-factum is the problem, truth being told. So hard to say when it would.
Yeah. But you know, Prashant, what about the quick commerce companies? Because a lot of the FMCG companies in the last con call did spoke about being disruptive by these companies and all. Is that going to be a game changer that going forward you're going to see a lot of this disruption?
No, very true. We do think it is a very powerful phenomenon. And to Nimesh's point, if we broaden consumption to not just FMCG, but include some of these other segments of the market, it's there are stronger pockets as well. Yes, it would challenge several business models, particularly in retail. For FMCG, I think net remains to be seen, but it's another distribution channel. So for any producer, the more distribution channels you have, the better it is, because the distribution channel not only expands reach, but also greater competition amongst distributors. So a threat globally to FMCG companies always is modernization of retail. If there are players like Walmart, Target, Aldi, and all these who become very big, commanding double-digit percentages of retail, then they have stronger negotiating power against FMCG companies. Now, if you have another set of players, e-commerce that came in, and then quick commerce, and if these channels start competing more heavily, they may restrict individual distribution channels to gain so much muscle so that they would start having an upper hand in negotiations with FMCG. So remains to be seen. As long as all these remain fragmented, that's positive for FMCG. If it consolidates in favor of a particular channel or bunch of players, then it would be to that extent post-challenge for FMCG.
So Vishal Mega Mart, an IPO which was open this week, they're a pure offline retailer, but they also are now piloting with quick commerce. And unlike using dark stores, they're now going to extend it to 7 to 10 kilometers from their store. So they don't need to hold any inventory. Their inventory is fungible. So even fashion is now adopting quick commerce, like across categories. You are seeing
DMart
it.
and everybody will have to go into that space where others are. We spoke a lot about the near-term trends, the themes, and whatever. If I want to ask you, given your global experience, that you've been seeing so much of global markets, 2 or 3 big, powerful themes for India over the next couple of years. What would be those? We've seen this. Once you identify right theme, then you are easy to pick some good stocks as well. Maybe if I want to ask a couple of themes that you can talk about.
Yeah, I think what we are just talking about, there was one example, talked about quick commerce, but not just limited to quick commerce, new age companies, if you will. Yeah. So US had its dot-com bubble in 2000.
Right.
And then had a disaster. Many stocks fell down 80-90%. But then many of those came back and a lot of new companies came back. And now this so-called new age sector, which is no longer as new age in the global context, is probably about 20% or plus in US. Yeah, at least the tech index, which is mostly dominated by either new age companies or companies which have transformed into new age, they're dominating. In India, that weight is still low single digit.
Can it become a big theme over the next 4 or 5 years?
It is. I don't see it.
I'm also asking because now there are a couple of digital funds which have been launched from the mutual fund industry.
No,
are they going to be
including
good
ours? I would say so. Yes, it's launched because it's our belief that in India too, we don't see any reason why this segment of the market won't evolve over time into similar 20% odd plus minus few percentage points in weight. It would not necessarily be the same companies who are currently listed. There will be a lot of new listings over time. But this is a component of the segment of the market that's bound to grow multifold in its weight in the indices.
Okay, Prashant, this has been a great conversation. Thank you very much for joining in. Enjoy the rest of 2024 and may 2025 be as prosperous for everyone.
So for me, I guess the big takeaway from today's interview with Prashant is watch out for the digital companies. Those are going to become very big in the next few years, right?
That's certainly one of the areas where we feel quite confident about.
Great.
Thank you. Thank you very much for joining in. With that, folks, it's a wrap on Editors Roundtable. Hope you enjoyed it. We'll be back bright Monday morning with more news and trade action. Until then, thank you for watching.